Okay, beautiful. So guys, we're going to speak about overextended market, about equilibrium, about discount and premium, and of course about the Fibonacci shooting zone, which is one of the most important points. So as you guys remember, I told you just before that we have a lot of break of structure. Okay, we can see it right there. Okay, we've just got a break of structure, but then more than that, that was an overextended market. So based on what I told you guys, when we have an overextended market, we know that the price is basically going to retrace 50% of the whole overextended market, because the 50% of Fibonacci is where the medium is and it's where the liquidity is. So the institutional, the big whales, and even the retails are trying to sell from minimum the 50% if it's not more. I think you guys know the 61%, but the 50% is the minimum and we call it equilibrium. So there is basically a first point we need to speak about, which is the discount and premium. So we're going to say that this is an uptrend, okay, and this one is a downtrend. I'm going to put that one in green, beautiful, and this one in red. Okay, so what we're going to do right now is that we are going to take our equilibrium and we're going to put it on the uptrend and the downtrend. Beautiful. So first of all, there is basically a first rule, okay, when it comes to trading. We're going to start with the uptrend. So we know that we have an uptrend. Let's say that the trend now is going to reverse a bit. So first of all, we always wait to reach minimum the 50%, okay, of the equilibrium before to buy. So this zone will be the minimum zone where you guys need to buy when the market is in an uptrend. But the whole buy zone from an uptrend is what we called the discount zone, which is the zone that is between the 50% and the 100% on a bullish market. So you guys always want and need to buy from this whole area, never in premium, okay? We never buy from the premium, we always buy from the discount. It's exactly like the everyday normal life. You always want to buy on a cheap price and never on an expensive price, which will exactly stay the same. So right now on a downtrend, we know that if we want to sell the market, we are always going to sell the market in the premium zone, okay, never in discount, because the premium zone is the zone which is above the equilibrium. It's the zone in which the liquidity is, and of course that is the zone where the institutional are basing themselves. And even you, on a simple and logical point of view, you never want to sell thing on a low price, okay? You always try to sell on a high price, on the higher price possible. So we always sell in premium, okay? So it does this or this, it doesn't matter. The point from my explanation right now is to make you guys understand that when you are in a bullish market and you want to buy, the first rule is always you buy in discount, okay? And when you want to sell the market on a bearish trend line, you always sell in the premium. Those are the two most important points to start the SMC, which is like this and which is like this. So now we're going to go back on the chart and we're going to see the last move we have on the US 30. So based on the last structure we have, we know that if we want to sell the market, we are going to sell it from the premium zone, because this zone is where the liquidity is. So let me give you guys a single example, okay? Let's say you were today at the Louis Vuitton store and you bought a bag, and you buy a bag for like 1k euro, okay? And you're waiting, after a couple of years, you want to sell the bag. I think you guys are gonna agree with me on the fact that if you want to sell the bag, you're not gonna sell it under the price you actually bought it, okay? You're always going to try to wait until the bag take value or the car take value before to sell it. And I think it's exactly the same thing when you want basically to buy something. Let's say you're going to go in a store to buy this Louis Vuitton bag, okay? The majority of the people are simply going to wait until the shops will do discounts, okay, because it's going to be the cheapest price and that's where everyone go to buy. And it's even the reason why every year we have a discount period in all shops in the world, and that's where everyone go to buy things, okay? So people always want to buy the thing on a cheap price and they always want to sell it on a very, very high price. That's really the first rule of supply and demand, which you guys need to understand if you want to get involved in SMC. So we know that the market now, if we want to take a sell, because we just got a break of structure, which means that the US 30 on a daily basis is now bearish. And if you want to sell the market, we are going to wait until the market comes minimum there to sell or there. But you guys are now going to tell me, okay, so what you're telling me is beautiful. I know that's my sell zone, but how can I get an accurate sell point? Because if I sell the market there and the market does that, I'm going to be like maybe 1,000 pips in loss, which make no sense. So what we're trying to find is an accurate point where we're going to be able to sell the market with a beautiful risk reward. And that's where the Fibonacci shooting zone comes in. So I'm going to take this one off and I'm going to go on my Fibonacci. I'm going to take the high, low. I'm going to click on template, FSZ, okay? right there. So you have here all the parameters you need to put in to be able to have the same FSZ than me, which is this one. Then you just have to name it FSZ, and you only have to click on equilibrium or tem or FSZ to be able to have them, because you have all your template that are saved here. So the Fibonacci shooting zone is a level which is stuck between 0.618, 0.75 and 0.786. This zone is basically a big liquidity zone in which the institutional and the big whales are basing themselves to take big short or big longs. Okay, right now we're in a bearish market, so this will be the zone where the market will potentially drop down. And you guys see that it actually gives you way more accuracy on where you can find some opportunities to sell the market or to buy it. Because instead of now having that whole premium zone, we only have this one, which take actually a lot of noise away. Okay, so now just to stay on a very simple basis with the equilibrium and the FSZ, we're going to let the market go a bit forward and see what he is going to do. Beautiful. So as you guys have seen, the market just came into the FSZ and dropped down. Sweet. Okay, so that was the first example, and you really need to take into consideration the fact that this zone is a very important zone. But you're going to see with the time that sometimes the market is going to go break the FSZ to then come down again, but that's going to be in the next courses. We first need to start with the basis, which are the equilibrium and the FSZ. I'm going to give you guys another example. Okay, so right here you can see that we got a lot of break of structure, but we get a really overextended market. So we're going to take, for example, this last low which was there, and that is the last high. So remember, once again, we are on a bullish market. So based on the fact that we're in a bullish market, this time we're going to we're first going to put the equilibrium, which is here. Boom. Okay, beautiful. And you guys can see that the market reacted perfectly on the equilibrium. But once again, the thing that we're the most interested in is to buy in discount, which is this whole zone. But because the zone is way too large, we're once again going to take Fibonacci shooting zone. We're going to put it right there. And we now have a very interesting level in which the market can potentially come to then continue his way to the upside. Now, so the goal will not to sell the market until the Fibonacci shooting zone. The goal will be to wait for the market to come in this zone to potentially trade the continuation, which means a long a buy. So we want to wait for the market to do this, to then take a buy and simply go back to the upside. So let's see what the market is going to do. And once again, we have a beautiful reaction, and the market simply went up. So if we just stay on an equilibrium and on a FSZ, we can see that we actually have a lot of accuracy when it comes to price prediction. And now we're going to add a lot of things in which you guys are going to see. It's just going to be amazing, and your trading is fucking going to be sniper precisely entry. Let me take a last example to make sure you guys understood everything. So based on the last structure, we can see that this was the last structure. Yes. So we got a break of structure right here. Which low was the one that break it? It was this low right here. Okay. So we're going to base the whole trade based on this low. So that's the last low, and we're now going to wait for the market to come a bit down to maybe why not continue the buy. So let's see. Okay, market start to go down. Yeah, so now what we're going to do, once again, boom, equilibrium, very simple, easy, sweet, boom, tack. Okay, where do we want to buy the market? Once again, discount. Yes, beautiful. But discount is too large, so we're going to take the FSZ, Fibonacci shooting zone. Here is it, and then the market is going to do what he needs to do, which means coming to the FSZ to continue his beautiful way to the upside. And boom. Easy, logical, and sweet. So I know your guys are gonna tell me, okay, but bro, like it doesn't work always like this. For example, look here, the market came, boom, did this, he broke it, and he went back up. I know, it's just the beginning, okay? Everything step by step. I first need to make you understand how the market cycles are working, how the medium, how the equilibrium, and how the Fibonacci shooting zone are working. And then on the other courses, we're going to be able to go in a way more precise trading, in which we're going to find the exact precise candle and zone where the institutional are buying or selling from. So to stay on an equilibrium and Fibonacci shooting zone basis,